Hey y'all, hey, Keisha was here. Welcome to What If Wednesday. What If Wednesday? So, if you are new to me, I am Keisha West. I am an enrolled agent licensed by the Internal Revenue Services, and I specialize in individual and business taxes. My niche is the trucking industry. So if you all know any truckers, make sure you share this live with them. But not only that, if you are an individual taxpayer, I'm able to service you as well. So welcome to What If Wednesday. I am so excited because I have been putting this together for a while. And that the reason why I decided to create this is because I get a lot of Keisha what if questions. So I said, okay, what I'm going to do is I'm going to commit by a couple of minutes to Wednesdays just to go over some what if questions that I receive from clients or just other people that have tax questions and they just need a quick answer. So if you all have any tax questions, any what if questions that you all want answered, then send them to Keisha, Kisha, what if at gmail.com. Okay, so I'm going to go ahead and get started. I have 10 questions that I'm about to go over. And if you all see me looking from camera to camera, I'm fancy today because I am screaming live from TikTok and Facebook. Okay, y'all. So what I did was I took 10 questions. I'm gonna read them and I'm gonna answer them. The first one is, what if I want to maximize my tax deductions, but I also want to qualify to be able to purchase a home? Okay, this is a good one. And this is one that I get a lot. A lot of people know that when you're trying to qualify for a home, they want you to have a certain amount of income where it's showing that you can actually afford to pay them back the money that they loan you for your house. Well, with that being said, people also want to pay the least amount in taxes. So you're kind of on the fence about, do I need to take all my deductions for this year, or do I need to show that my business is profitable and I can pay this loan back, or my income is enough to be able to cover the loan? Well, what I would say is you need to really consult with your tax professional, because I love to maximize on my tax deductions, but I also understand that doing so could hinder you from being able to qualify to purchase a house. So what I would suggest you do is consult with your tax professional. Make sure that you all are meeting at least quarterly so that you can go over your numbers. And even if you want to show a lot of profit at the end of the year, at least you'll be able to make those quarterly tax payments that will allow you to be able to pay as you go. So that, therefore, once you do that tax return and you may owe thousands of dollars, but if you have paid those 4 payments throughout the year, then you won't be surprised and have to pay, a lump sum at one time, and you can still qualify to purchase your house because you would show where you have a profit and you can actually be able to afford the amount of the loan. So if you want to maximize on your tax deductions and you also want to be able to qualify to purchase a house, make sure you are consulting with your tax professional so that you all can create a tax plan that will allow you to make quarterly tax payments throughout the year. Okay, number 2. What if I don't want to form a LLC for my trucking business? How can this affect my business? Okay, so there are different business structures. You can be a sole proprietor, which is a sole proprietor is just one person operating in their business, and they are their business basically. So this is common for truckers, but one way I see you operating in that manner, it doesn't look like a business. It's just you. If you're looking to scale your business, you want to go ahead and register it as an LLC or any other business entity type, depending on what's the best tax benefit for you. But you want to at least go ahead and register your business. Therefore, it would show that your business is professional. But not only that, being a solo owner can cause people to look at it like you may not be able to handle the capacity of work that they have for you. So if you go ahead and register your business, they don't know how many people that is in your business. It can look bigger than what it is, which will allow you to receive more contracts. But not only that, when you register your business, then you are protecting your personal assets. In the event that you're sued, they will only be able to come after your business assets and not your personal. So to answer that question, if you don't form that LLC for your trucking business, your personal assets could be at risk. Okay, number 3. What if I want to hire another driver? Should I make them an employee or a contractor? Okay, this is a good question because a lot of trucking companies, they're hiring people as contractors, and I just talked about this yesterday, but they're hiring people as contractors when in fact they should be employees because you are providing the equipment for them. You are setting the time that they work. You're controlling the behavior of their operations. But to answer your question, it depends on you. If you hire them as an employee, then you will be required to pay employer taxes. You'll be required to withhold that Social Security and Medicare from their earnings, and you have to remit that over to the IRS. If you hire them as a contractor, then you put the responsibility on that person, on the contractor. You will not have to withhold anything from their earnings. They will be responsible for taking that money and remit it to the IRS. So if you're looking to, have more responsibility, I would say hire them as an employee. Or if you want to add like incentives, like you want to offer them benefits and things like that, then hire them as an employee. But if you want to pass on that responsibility to them, I would say hire them as a contractor. Okay, number 4. What if I haven't filed taxes in 10 years? Where do I start? This is a good question because a lot of people, let's just face it. When COVID came, a lot of stuff changed. People didn't want to file no taxes. They just was over it. So I would say for a person who haven't filed taxes in 10 years, I would say start with the last 6 years because the last 6 years will bring you in compliance with the IRS. But this can be a loaded question because let's just say you just haven't filed taxes, but you've been paying taxes. You could possibly be due a refund. So in that case, it's best for you to file the last 3 years because we still would be able to get your refund if you file within those 3 years. So I would say consult with a tax professional so they can go over your situation to see if in fact you was due a refund for some of those years and you just didn't file. You can still get that refund. And if you owe for the previous years, you can use that refund to pay that debt. So just to reiterate, if you haven't filed taxes in 10 years, where should you start? You should start with the last 6 years. And if you are due a refund, I would say the last 3 years. Okay, number 5. And if you're just tuning in with us, what this is What If Wednesday, where I go over tax questions that I'm often asked. If you have a tax question, send it to Kisha, Kisha, whatif@gmail.com. And what I would do on Wednesdays, I would go through those questions, pick about 10 of them, and then I'll come on here live to answer them for you all. Okay, where was I? Number 5. What if I earn income in different states? Do I have to file a return in each state? Okay, that's a good question, and that depends. Because some states, let's just say you earn income in Georgia and Florida. Florida don't have a state tax. So just because you earn income in that state, you will not be required to pay in that state. However, each state, they have their own set of rules, you all. So a lot of truck drivers, they earn income in different states and they need to be able to allocate that income to the state. But each state have their own rules. So it's best for you to consult with a tax professional and we'll be able to determine if you are actually required to pay taxes in that state and if we need to file a non-resident return for you. Okay, number 6. What if I am doing my own taxes? How do I prevent myself from being audited. Okay, I hear this a lot. A lot of people want to know, how can I stop myself from being audited? You all, being audited is random. Now, some things I would tell you all, there are some things that they look for that's a red flag. So it's not necessarily you prevent yourself from being audited. It's the fact that they see something that may be alarming and you are more apt to being audited. One common thing that I see is when people are doing their own taxes, even my clients, some of them, before we actually, get a good relationship, but some of my new clients, when they come to me, I ask them for their expenses. And you better believe it's going to have all zeros or it's going to have a 5 at the end. Y'all, that is a red flag that you did not actually sit down, track your expenses, because if we get expenses that end in 0 or 5, we already know you estimating that, you guessing it. And let's be honest, when we go and purchase things, it doesn't always end in a 0 and it doesn't always end in a 5. We're going to have some cents on there, y'all. So make sure if you are doing your own taxes, you are keeping adequate records. You're not fudging your numbers, is what it is. It may take a lot of work, you all. Doing taxes is not easy. You have to keep track of your income and your expenses. Keep your receipts. Go back in these emails where they've sent you proof that you purchased something and put all of it on there. So don't just prepare returns that end in 0 and 5, because that is a red flag to the IRS and you are more apt to be audited if they see a return like that. Okay, number 7. What if I am driving my personal vehicle to a truck stop? Can I deduct the mileage? Okay, so we all know that if we drive our personal vehicle for business use, you can deduct the mileage. However, if you are commuting to and from work, you cannot deduct your mileage because commuting is not a deductible expense. However, if you are driving your personal vehicle for business purposes, such as going to your business bank account to get money or going to buy supplies, things of that nature, then you can deduct the mileage from your personal vehicle because you are in fact conducting business. So be careful with that, you all. Commuting is not deductible. Commuting is not deductible. However, your business is. The things that you do to conduct business is. Okay. Number 8. What if I have rental properties? How can I save in taxes if I am earning more money? Good question. Okay. A lot of people, they invest in rental properties and they want to earn more money, but also we want to pay least amount in taxes. The good thing about owning rental properties is you still have expenses. So you may provide lawn services for that those renters. You may have to still pay property taxes because you are the owner. You may have to still buy things. Let's say if they maintenance, if something tear up in the unit, you're still responsible for paying for those things because they are renting from you and you are the owner. So with that being said, you can write off those expenses that you have to conduct business as that landlord. So the things that you are purchasing and still taking care of for that home, that would go against the income that you earn. So that would in fact lower your taxable amount. So if you are an owner of a rental property, the way that you save is by keeping track of your expenses and subtracting that from the income that you earn. And this could be things like landscaping, property management fees, even the amount, if you're still collecting your rent in person, which a lot of us probably not. But if you're still collecting your rent in person, then you could deduct the miles that you even travel to collect that rent. Okay, number 9. We almost done, you all. I'm going to do 10 at a time. Again, if you're just coming on, I am Keisha West. And if you have a tax question, send it to Keisha, Kisha, whatif@gmail.com. And on Wednesdays, I come on and I answer about 10 questions just to help you all out. Okay, number 9. What if my wife rides with me when I deliver loads? Can I hire her? Oh, this is a good one. And this is actually like my favorite tax strategy. But yes, the IRS say you can employ family members in your business. And as a truck driver, if your wife is riding along with you, yes, you can hire her. But rules have to be followed. You have to make sure that she is actually doing work in your business. So one of the duties that your wife or your partner or whoever else is riding with you can do, they can be looking for more loads for you as a truck driver. She could be doing your bookkeeping, keeping up with your receipts. She could be, just marketing your business, handing out flyers where you all go to different truck stops or different businesses, handing out your business cards. Those are things that your partner could be doing for you, and you can hire them and pay them for doing work in your business, but it must be work that they are actually doing. Don't make up any numbers. Make sure it's a job duty that they are actually doing and a service that they are providing for your business. The plus to that is the money that you pay them is an expense to you, so you can write that off to help you lower your tax liability. And the last question for today, you all, what if I donate to a charity? Will that help me save in taxes? This is a good one. Because y'all know a lot of times we go and we donate things to Goodwill, other thrift places, or we may just donate to a charity, a nonprofit, and we feel like, okay, now it's tax time, and you hand all of these things over to your tax professional, but you don't see the benefit of doing it. Well, let me break this down for you all. The reason why is because it depends on if you take the standard deduction or if you itemize your tax deductions. So the standard deduction is a dollar amount that is attached to your filing status. So if you file single, married filing jointly, married filing separately, head of household, all of those things have a dollar amount attached to it. And depending on if you do that or if you itemize your deduction, that would determine whether or not you're going to save in taxes. If you take the standard deduction, no, it don't even count. So you can be donated hundreds to thousands of things in charity and to Goodwill or these other thrift places. But if you have not, excuse me, y'all, my niece in here. I'm live, girl. Well,
do you have some cake?
Go. Okay, y'all. So back to what I was saying. In regards to if you donate to charity, can you benefit at tax time? If you take the standard deduction, no. If you itemize, yes. And the way you would determine whether or not to take the standard deduction or itemize, then you would in fact see which one yields the highest amount. If your standard deduction is higher than your itemized deductions, go ahead and take the standard deduction. But if your itemized deductions, and this would be things such as your mortgage interest, if you own a home, your medical expenses, also any those charitable donations that I was talking about. If those charitable donations, medical expenses, and all of that is more than your standard deduction amount, then you need to itemize. And that's the way that you will benefit on those donations you give the Goodwill and those donations that you give to nonprofits, profits, or charities. So again, y'all, that was my What If Wednesday. If you all have any tax questions that you want answered, send them to Keisha, Kisha, whatif @gmail.com, and I'll be happy to come on and answer them for you all. Thank you so much for joining me today, and I will see you all tomorrow. Bye.